I think the most interesting one probably came actually on my Twitter feed when I was just going through the jobs report, a little while ago downstairs. Just this discrepancy between, particularly in the tech sector. I'm a little biased towards it because I was in San Francisco this week talking with a lot of clients. But it's sort of this huge gap that you see between tech employment relative to overall payrolls, and then tech stocks relative to the S&P. The latter of which is at an all-time high, the former which is at an all-time low, kind of showing this, I think certainly a productivity story, but the fact that you've seen one sector in particular under immense pressure, specifically, from AI-related things now, but the fact that that hasn't necessarily bled into the broader labor market, I do think that's been one of the more constructive stories in U.S. labor over the past couple of years.
Mentioned you're just out in San Francisco. I would think people out there have a strong opinion as to technology and the development of technology. And software has been seen as a sector that might be at risk here. We've had some big stocks sell off some big ways. What's the vibe out there? Is AI a friend, enemy, a frenemy? How are they thinking about it out there?
I think it's definitely viewed more as an enemy. But I will say, the questions are not as much, is the tech sector going to survive? It's this bigger question around sort of bubble risk and how much spending is being done by a lot of these hyperscalers and how much that's contributing to U.S. GDP. But we've been making the case and reinforcing the point, actually, that it's, this is just a different sort of cycle that is not consumer driven. You can kind of take it as, post-pandemic where the consumer just hasn't been in the driver's seat. Not necessarily a bad thing. It's just different than what we've been used to.
Your first paragraph alludes to what Paul and I talked about at 7:10 this morning, which is, okay, there's a K-shaped economy. What's the character of the K-shaped stock market? I think, Paul, we can say we've never seen this.
It feels
It doesn't feel like 2001.
No.
What's the K-shaped stock market?
I think, for now, it is the difference, I think, in the consumer versus the rest of, tech communication services. You can actually take that split. Consumer discretionary tends to get lumped in with tech and comm services because it has two of the Mag 7. But I think if you excluded those and you look at the broader consumer sector, discretionary has been unchanged for the past year and a half. Versus tech and comm services doing much better. So I think that that's kind of been more of the nature of the K, especially now. Assuming we get a relatively hot CPI next week for April, you're probably going to have another month where inflation-adjusted wage growth was either zero or negative slightly. So I think it does make sense given where we're at with both labor and inflation, why the consumer part of the market just hasn't participated as much.
Pretty much. Most of the way through the earnings season here, what's the takeaway that you have from earnings? Both kind of what we heard and kind of what the guidance was, maybe.
Yeah, the takeaway is the market is largely undisturbed by what has happened so far geopolitically and in the broader economy. But, my general framework for thinking through all of the, policy disruption that we've seen over the past year and a half is that you do have to make this distinction between what is the front page risk and what is the bottom line risk. And I think earnings season is sort of validating that again, where at least for an index like the S&P 500, which is not necessarily indicative of the broader U.S. economy, those large cap U.S. stocks, large cap corporate America, is for the most part largely been unbothered by this. Doesn't necessarily mean that there aren't impacts to the broader economy, but we've been making that distinction because there has been this growing split between the vibes in America versus what the market has been doing.